The housing market to become a bloodbath in 2025. That, according to Melody Wright. Folks, Melody Wright is a guest we have had on the channel a couple of times. We spoke yesterday, and tonight at 6 p.m., you will see a long discussion with Melody Wright and I discussing just where we are in the housing market. Melody Wright, if you don't recall, is someone who has tremendous experience that we must respect around mortgages, right? This is where she has played for the last 20 years and is an area I have zero experience. So you will see in that discussion where we talk about delinquencies, 30, 60, 90 days. We talk about FHA. We talk about the levels potentially being as high as 2006. In that discussion, we also talk about what would happen. What would happen if such a thing would occur. And to be clear, let's put some numbers on a bloodbath. You'll hear us in the discussion, I think at the tail end, call anything in the double digits for 2025 a bloodbath. And I agree with that characterization. If you studied the Great Recession like I have, you know that the historical largest drop year on year was 8.9%. Housing doesn't typically react that way. So again, if we get 10, 11, 12% drop, which Melody Wright is calling for, and to her credit, she called in January. We also have a discussion about her call of a 5% drop this year. We talk about her call for 10% next year. So again, this will be a very informative conversation. We obviously do not agree, but we are respectful and we shared our experiences and our thoughts. So again, I love it when somebody who disagrees with me pretty significantly, frankly, is nice enough to come on the channel. I've invited plenty of Crash Bros. I've even offered a bounty or a reward. None of them want to show up because they've been wrong for so long. So I hope you enjoyed that conversation with Melody Wright. It is about an hour long, if memory serves. We go through lots of things. She actually shares a report during the session. So again, look for that interview tonight, 6 o'clock Pacific. Set your alarm. It will be one you don't want to miss. On top of that, we might as well share another one that goes out at noon. At noon today, we get a wonderful analysis from Beth Traverso. Beth Traverso obviously works in King County. She works in the state of Washington, which had the largest appreciation in housing for 40 years at over 800%. We talk about that very briefly at the opening, but then we get into the meat and potatoes. Folks, it appears that the spring selling season is over and we are already seeing a behavior change. Folks, I can't tell you, rates matter. Rates matter. In fact, with rates over 7%, even so slightly, I think 7.05% was the last I saw. Mortgage demand, make sure I get this correct. Mortgage demand for refis was down 14% week on week and down 1% for purchase week on week. Again, I think it has become very obvious with actual data. This is becoming not opinion, it's becoming fact. 30-year mortgage above 7, buyers pull back. 30-year mortgage below 7, marginal demand arrives. Folks, on top of that, I think we now have a magic number. We have a magic number that truly unlocks demand. And for a while, you've heard me kind of guess. Is it 6.5? Is it 6? Is it, what is it? Well, did you know, and shout out Nick Timoros from the Wall Street Journal. Nick from the Wall Street Journal posted this. For the last 52 weeks, so for 1 year, the 30-year mortgage has not been below 6.7%. Why is that important? Well, if the consumer has taught me anything over the last 30 years of studying them, the consumer wants a deal. The consumer wants a deal. So if we have been above 6.7% mortgage rates for a year, And sometime in the next 3, 6, 9, 12, 18, whenever, we go below 6.7%, I think we're going to start to see demand pick up. That's the line in the sand. I want to shout out Nick Temeros from the Wall Street Journal for uncovering that fact because I think it's important. 6.7%. So next up, let's talk about Larry Summers. Man, Larry Summers in the news again. Larry Summers actually put a number on something that you've heard me talk about for 6 months. You've heard me talk about for 6 months that the Fed needs the threat. They need the hammer of going higher. Now, I don't think they will, but again, I think they need to be clear that it is possible. Larry Summers actually thinks there's a 15 to 25% chance that the next rate move is higher. So the good news is we will not have to wait very long. I think on June 12th, there's the Fed meeting, and I do believe, I didn't verify it this morning, but I do believe we will get what's called the dot plot. It is the Fed president's expectation of the future around rates, GDP, unemployment, all of those things. So we will see if any of the Fed presidents have the guts to put an increase on the table. But again, according to Larry Summers, it could be as high as 25% or 1 in 4. Folks, if you are part of the school community or are you thinking about joining the One Rental at a Time school community, I have great news for you. I'm taking a page from Ty. Ty just recently gave you 6-hour masterclass on creative finance. I want to show support as well. So what I will be adding to the school community for free is my 10-week boot camp. We had a 10-week boot camp with about 41 Rental at a Time fans. It cost $1,000 to be a part of this. I'm going to be adding it to the school community as a course for free. So again, you could join the school community, ask questions, be a part of it, join the weekly phone calls, but now you are also getting course material that hopefully takes you off the sidelines. The 10-week boot camp was created because I wanted to know what the community was doing, what the community was stuck. We talk about buy box. We talk about different buying vehicles. We talk about all kinds of stuff, and we bring on a Rolodex of millionaires. If you are stuck, good news. You don't have to spend $1,000. You can just join the school community, and it will be loaded over the next week, probably on Friday or Saturday, as I don't record content those days. But you can count on it. It is coming, and I look forward to exceeding your expectations again. Don't forget that the next 2 phone calls are scheduled. We have one on Friday at 10 a.m. with Matt the Mortgage Guy, talking mortgage, looking at your quotes, trying to save you money. Matt the Mortgage Guy has a goal to help somebody save thousands of dollars. And again, it is 100% free. You'll find the Zoom link in the calendar. And then on Sunday, 9 a.m., we're going to have the one and only Jason Pritchard. We have verified that he will be able to make it today, barring another emergency, but he promised he will make it for the community. So again, folks, we are continually exceeding expectations and giving. Join the community. Last thing, we are having a conversation today with one of our millionaires. She's going to lay out her portfolio. We're going to give her some recommendations. She has some goals that she wants to accomplish in the next 7 months. We're going to go into a little bit of detail. I'm only going to put that video on school. I don't think that video belongs on YouTube. I don't think I need to unleash this to the world and potentially bring prying eyes, if you know what I mean. But we will put it on school. I've spoken with her, and she is cool with that. So again, if you've ever thought about, hey, I got a portfolio, now what? You're going to get one of those examples later this afternoon. So what else is going on? Let's talk about 21 states. Folks, 21 states. So what is that, like 40%, a little more than 40%, have seen a jump in jobless claims over last year. This is according to Nancy Lazar from Piper Sandler. Again, these are things we have to watch. I know Danielle DiMartino Booth has been highlighting similar stats, although I thought Danielle's number was like 41 or something, but I could be wrong. How about Austin Goolsbee, another Fed president? They all seem to be talking this week. The Fed should be highlighting or should be watching consumer delinquencies. I actually thought that was a pretty interesting article to read because, again, with Melody Wright's Bloodbath call in 2025, a lot of our initial discussion is around consumer delinquencies. So again, just so you know, total delinquent of all debt is 3.2%. 8.9% on credit cards, 7.9% on auto loans. If you want to talk about home loans, not a problem, at least yet. Although Melody Wright passionately agrees that there is some underlying data quality issues. You will hear that discussion at 6 o'clock. We've had some earnings that I think are interesting, right? Again, remember, one of the things that I've talked about is a rolling recession. Let's talk about American Airlines. Travel has been seeing the best of days recently, correct? Well, American Airlines just lowered their Q2 guidance. And folks, that is after a record Memorial Day, right? The TSA screened a record number of folks ever. But American Airlines is whacking their outlook for Q2. How about Abercrombie and Fitch, man? Abercrombie and Fitch, woo, blowout numbers. Beat top, beat bottom, raised guidance, kind of a triple beat. Had the strongest Q1 ever. Sales were up 22%. Damn, not all retailers like Lululemon are sucking wind. Abercrombie and Fitch, crushing it. I don't think I've ever been inside an Abercrombie and Fitch, but somebody is doing something right there. We've had earnings from Chewy. This is one that I wanted to watch over the weekend around pets. Beat top line, beat bottom line, and announced a share buyback. Dick's Sporting Goods. Beat top line, beat bottom line, raised guidance. Consumers are spending more on sneakers and athletic gear. Folks, rolling recession. Rolling recession. I don't know how you can have these retailers blow it out and then have a travel company like American Airlines and not think rolling recession. Morgan Stanley's wealth management chief investment officer, Lisa Shallett, hopefully I pronounced that right, says that the stock market is priced for perfection. One would think, right? What do we got? The Dow at 40,000. We've got the NASDAQ at whatever it's at. It certainly seems that we are headed that way. What else do we got today? I think that's it. Oh, let's do one more thing. Again, something we talked about this year. I talked about in early January. We were going to see a lot of acquisitions. Just today, I read about 3 multi-billion-dollar acquisitions. We've got Merck buying iBio for $3 billion. We've got T-Mobile buying most of U.S. Cellular for $4.4 billion. And not to be outdone, ConocoPhillips to buy Marathon Oil for $17.1 billion. Pretty crazy. Folks, again, please join the school community. It is my goal to exceed your expectations in all things. We have multiple calls a week with millionaires where we can ask your questions. Trust me, this community is going to grow. If you want to get in early and ask your questions, now is the time. If you want to get better, if you want to learn, if you want to understand what is going on, we are adding more and more coursework. You've got a 6-hour masterclass on creative finance. Now or soon, you will have a 10-week boot camp. Multiple hours. We will take you through the process of creating a buy box, reviewing buy box, looking at different buying vehicles. It is going to all be in school and more. Join the community. And again, remember, once we get to 100 students, there will be content that only ever exists on school because I want to make sure we continue exceed your expectations. Have fun. Have a great day. Take care. Later.